Hello, everybody. Welcome back to the Prospero.ai stock market live streams. I see JC was here nice and early. We are live on a Tuesday this week with the markets being closed yesterday. So hopefully everybody had a great 3-day weekend. The markets are opening up in the red today. So we're going to go through a lot of the reasons as to why we are opening up down in the red. We'll check on the actual live performance right now. We are seeing the QQQ, SPY, and Dow Jones all down between 1% and QQQ leading the way at 1.1%. Russell down about 0.5% right now, but the indices are off the lowest points of the day, so they're trying to climb higher as we speak. And the VIX was up quite a bit and dropping now back down to almost a flat line. So we're seeing some things moving in good directions if you're a bull and want to see the market go green from here. As everybody's tuning into the stream today, be sure to smash that like button if you're watching on Twitter or YouTube. We're going to have a great stream, a lot of great topics. I will take you through all of them now, and then George will join me in just a bit, and we will dive into them in full detail. But the main reason as to why we're seeing so much volatility here today is the tariff updates we've been getting over the weekend. Looks like we're heading for some tariff drama round 2, this time with a lot of European countries, and it's all over the Greenland, USA, Denmark relationship. So we'll be going through all of that. What can your playbook be this time? We saw this happening just over or under a year ago at this point of April of last year, a similar situation. And we saw the market drop very quickly and then rally from there. So is that going to be the same kind of playbook this time? We'll go through it all. Mario's in the stream saying morning all. Good morning to you, Mario. Welcome in here today. We'll also discuss some of the impacts from this tariff situation of the USA and possibly making them less desirable business partners. Is this going to push countries closer to China, the biggest competitor of the USA? So we'll go through that as well. Then we have a story about the NYSE introducing 24/7 trading. What is this going to mean for investors, of the viewers of the stream, retail investors, everyday investors? How is it going to impact their experience? Then also institutions, and will this be adopted by everybody? Are we going to have everybody checking their portfolios 24/7, 365, or are there going to have to be some regulations? This also wasn't approved yet, so they're seeking regulatory approval still. But it will also be on the blockchain. So depending on which blockchain they go with, if it's already an existing one, if it was Ethereum, Solana, Cardano, any of the others, how would that impact the value of that crypto if they were to announce? Then we have OpenAI looking to add ads to its free tier of ChatGPT. We've mentioned how they're looking to IPO probably soon, so maybe a way for them to show some better. It seems like their revenue's probably doing pretty good, but maybe their earnings isn't as great as people had hoped. So maybe this is a way that they can up that. But how will users respond if they know that their data is being used for ads in ChatGPT? Will there be some backlash from it? We actually, let me shout out the Discord now for those, if anybody's new in the stream right now, doesn't know, it's linked down in the YouTube description. You can join it through there. We have a new section of it that people can suggest topics. So we got a few today directly from the Discord. One of them was bringing up ARM stock, which we haven't talked about a ton. So I'm glad that someone mentioned it, and we will be bringing it up for sure. And then also we had a question about ASTS, a popular stock and one of our stocks of the year, ASTS and LEU. They just got awarded a contract, a big contract working with the government. So we'll go over what that means for ASTS. They were up hitting, I believe, a new all-time high on Friday. And let's see how they are doing here today. They're one of the more volatile stocks. Doing okay, even in a red market, only down just over 0.5% here. So still at $115 per share. So not too bad. NW is in the chat. What's one holding you all have that is still in the green? Just wondering, anybody got any answers for NW? Any stocks in your portfolio in the green here today in a red market? One stock that's in the green that I wanted to bring up on the stream was SNDK, because it seems like SNDK can do no wrong here in 2026. It was up over 7% this morning in the red market, now up 68% year to date on January 20th here. So I wanted to bring them up and ask George if memory for compute is the new strongest sector of the market. We've had nuclear, we've had space, we've had the neo cloud data center. Wondering if SNDK is positioned to lead. Oh, I see some people are jumping on the green stocks. We have AMD in the chat, IAG, PPTA, EXE. All right, so we got some green throughout the portfolios of the viewers of the streams. All right, any more topics? We are going to also discuss the Magnificent Seven stocks. All are red now year to date, except for Google, which is only up 1%. So a pretty slow start for Magnificent Seven companies. What's George's latest thoughts? We have Meta, Tesla, Apple leading to the downside. A lot of these companies are going to be reporting earnings in the coming week or two. So why have they gotten off to a slow start? Even on the streams, I've noticed that we've been discussing other companies a lot more recently than these 7 companies, which have really driven this discussion for a lot of our streams for as long as we've been streaming. So we'll take a look at the Mag 7 and see if anything is interesting going on with them, or if we're just in a waiting period. Now, what I also want to share is the story of how I got connected with Prospero, which some of our viewers wanted to know last stream, which we got cut off just before we could get into it. So I got to share it for you guys today. So back in the day when I was in college, I was going to school. I majored in biology, believe it or not. I was going to be a physical therapist. And my junior year, I was on the route and I was getting a little, I don't know what the term for it would be, a little concerned or just unhappy with the idea of a future of having like a capped ceiling job. So I started to wanted to get into entrepreneurship and started to create things. So I had this social media. I didn't have any money or connections, so I was like, what business can I start? Social media seemed like the easiest route. So I started this thing called Foster Finance, and I was posting like daily stock market content. And I actually interviewed George on that channel. It's now been rebranded as Fosterfi, and I'm not very active on it at all. But the interview with George is still up there from, man, when was that? I think 2023. I'm pretty sure that was 2023. But I interviewed George. It went well. And then I made some clips from it. And then a few months later, I reached back out to him and I was like, hey, I see Prospero isn't so active on social media. Like maybe we could work together. And the rest was history. He said, yes, I started with like a slow or a small position. And then, just over time, over years, we have kept on growing. And here we are today. I think this May will be 3 years at Prospero. So time flies when you're having fun. But yes, JC, I was going to be Dr. Steven in a different simulation universe. That was me. JC, cool story.
What
Thanks
were
for
you
sharing.
getting your doctorate in?
Well, I was going to be I was thinking I was going to be a physical therapist. So that was the path I was on in college before I got more into finance. Things took a switch. But yeah, I'm thankful because I would have had a lot more student debt, that's for sure, if I went down that route. I got a cousin who's a physical therapist, but it's a good job. NW, yeah, thanks for sharing. You are welcome. But everybody, we got to jump into the top picks here quickly because we got a hard out at noon today, and we got a lot to talk about. And there's a lot going on in the markets. Some massive volatility here to open the day. Although, like I said in the beginning of the stream, we are seeing things kind of settle down, and the market's kind of creeping higher now. But QQQ, SPY, Dow Jones, all down over 1% still. A lot of global news over the weekend, George. The tariff situation is escalating again. We saw this happen last year in April, and we saw how quickly the market can drop because of headlines like this that scare people, break models. The QQQ and SPY net option sentiment in Prospero have been bearish even while the markets rallied. Today we're seeing QQQ at 4 and the SPY at 0. How seriously are you taking today's drop and a little bit of the playbook you have for the overall market now that we've had a similar experience last year to what we might be going through right now?
I mean, it's a bit hard to read, right? Um, just because in the past we've seen some of these like deep tariff dips, but I think part of those dips came from some real uncertainty about how long would happen. But since then we've seen the taco trade, and I think that like we're even seeing that today. We saw some panic and then a pretty good rebound, not in all assets, but a pretty good rebound. So I think that's a lot of the time, a lot of what we were talking about the market going down was that the models have to take seriously like the max downside of these tariffs continuing. But I think the models at this point are not, and for good reason, legitimizing kind of the max downside situation. And then I think Dan Ives came out today and said, buy the dip already, like buy the dip, of the morning. So, yeah, I think, I think we're still in a market where people are seeing opportunity in any dip, because they're not ultimately taking the tariff stuff seriously. And, I also think that, we got news that, that if Trump, say, attacks Greenland, that Republican senators would actually then, or I don't know, senators or congressmen, would quickly impeach. I think it's in the House first. So I think that's another wrinkle here where I think some people in his own party are, starting to get afraid of, I think, the aggressiveness of some of this stuff. And, also, I think part of it is if you read that note to Denmark, right? Him talking about him not winning the Nobel Prize as being part of the reason that he now would be willing to take Denmark. I think that's a pretty scary amount, beyond, I think, just like accusations of self-interest, where there's been many, but there's many with, a lot of presidents. I think if you're just like outright being that kind of petty with other world leaders, I think that's kind of like a scary sign in its own right, even if you don't follow through. It's kind of a weird, he could like the rest of the letter was, strategic, like you can't defend that from China and Russia. I mean, and if he just said that, I think that would have been a lot more, stress inducing for the other people in his own party. I think because it's just like it's kind of like a scary, if you're trying to have credibility internationally as like a senator that has international contacts, a lot of them, in Europe, like it's kind of a blight that makes your negotiations a little tougher if that's being said outright. So I think that that's just as much at play now. But I think what it amounts to is people seem to be taking this, even though it's very severe, they seem to be taking it like less seriously than any of the stuff before. And whether or not that's because of the taco Trump always chickens out thing, or it's because, maybe people are starting to believe that, there's a bit of a, the rope around him in terms of flexibility is tightening. But we certainly it is certainly interesting to see how fast the market has rebounded today.
Do you have any thoughts about the Supreme Court ruling on this? I see NW shared it in the chat as well. One way or the other, do you think it'll be bullish or bearish if they rule them, unlawful and like get rid of them, or say they're constitutional and support them and they're allowed to go on? One way or the other, do you have any thoughts about how it'll impact?
I mean, I think this is another big unknown. Like, I don't know, like, he might just not pay it, right? like, like he's already talked about that, like sinking. He made that, post about like the country not being able to afford the payments, and you know, yeah, I don't know. It's been a very interesting presidency, and like, yeah, I'm not totally sure that even if there is a ruling that those payments are going to be made, and you know, the Supreme Court delaying it, might just be them, figuring out what they want to do themselves. Uh, so yeah, I think there's a lot of unknowns around it. But yeah, it's a tough one to read.
We have Nick joining us. Hello, Nick. Welcome to the stream. Saying Netflix earnings today. Are you less interested in touching any company reporting earnings with all this noise in the markets, or how are you feeling about now we're really getting into the heart of earnings season over the next like 2-3 weeks?
I mean, I think we talked about Netflix already. Our thesis hasn't really changed on it, which is that there's a lot of up and downs about this acquisition, and like we're not really in the business. We don't want to be in the business of predicting what happens with an acquisition, what they could potentially say in their earnings call about the acquisition. There was a new deal approved, right? I don't know how Netflix is doing today, but that could only be, they could state the risk factors on that deal, and that could be not what anyone wants to hear.
Yes. So I have one more question for you on the tariff situation, and it's not even on their impacts of the business world and stocks directly today. It's the overall standing of USA in the world, how we kind of lead the business world globally. If countries around the world are more hesitant to, make deals or, rely on the USA for business because of all this stuff going on and the uncertainty from it, would that lead some of the countries we have good relationships with in the business sense to China or other countries? And does that hurt our standing, beyond this situation, like going forward?
I mean, I don't think we really know about corporations. Like, one of the stocks I was looking at shorting it at open today, but there was like too big of a rebound, is like Airbnb, right? Because I think in terms of individuals, right, people planning trips, I think you might have lost those people already that are just not, comfortable with behavior. But, corporations are kind of, they're in the business of making money. And corporations all the time, governments all the time do questionable things that make them more money, right? So yes, if there's a big tariff on wine, or and then something retaliates with a tariff in Europe, and then the economics of doing business with us change, yes, that matters. But if America is still like the cheapest, most popular option, I don't think that's going to change. But that adds complications too, right? Because it's just like, okay, what if what about like McDonald's, right? Are people going to stop going to like McDonald's Europe? Like, yes, I view that similarly to Airbnb, but again, it's like a different price point, right? So it's a bit different. Like, people that eat at McDonald's because it's just the best, cheapest option, they might not be, that might not be as affected as, someone that's considering, planning a trip to the US or other places, right? I think when you're talking about like luxury items, and there's kind of more choice in it, I think you're more likely to get people substituting out of it for moral reasons, for the same reasons as the corporations, right? Some people just need to make practical decisions in their budget and can't afford to be very choosy if, say, McDonald's is their cheapest option. But like a trip, an Airbnb in America, that's pretty pricey. And I think those people are more likely to choose alternatives because they have the ability to do that and a lot of choice.
Yeah, that makes a lot of sense. We got a question from Nick, a good question in the chat. What are some of your favorite indicators to identify when a stock is approaching a bottom or a good discount buy? Doesn't have to be an indicator, could also be a technique that you use, he's saying.
I pretty much look at a few things. I look at net option sentiment. I look at short pressure. I look at, upside and downside. Other than that, I'm looking for either a like a double or triple bottom on a daily chart for like a long, and I'd say the opposite would be I'm looking on like a short. I'm either looking for a top or like a double top, or I'm looking for a bottom that's broken through the daily low for like a while and has a weekly that's like a weekly low that's still below, or I'm looking for kind of like a macro reason that I think that they have more room to go down. Or they're like not quite at their daily low. Like they're somewhere in between their like all-time high and 52-week low, something like that, where I'm like, okay, it has room to go down. But yeah, on the longs, for example, if I saw something break through the recent like daily low, I'm also not touching it. I definitely use a lot of charting for that to confirm what I'm seeing with net option sentiment.
It is interesting hearing you looking at like the daily though versus like a monthly chart or like, something longer time frame. You're really narrowing it down to the daily action of the stock. We have Purveyor of the Odd Things joining us in the stream. Sorry for joining late, was watching the Carney speech. Thank you for joining us. Good to have you here. Another topic I can spin to now is the NYSE updating that they are looking to introduce 24/7 trading built on blockchain. So we've covered different things like this in the past. Different companies are looking to bring this forward to the markets. Obviously, Robinhood has kind of like pushed forward this, and I think a lot of people are looking to follow them. How do you think this will change the investing experience of retail investors and institutions? Is it going to be a different experience? And do you think this will be adopted by a lot of the market participants? Like, are we all going to be checking our portfolios, just before we go to sleep at night to see, what the latest thing is happening in the markets if it's open 24/7?
I mean, ultimately, I think it's better for if you're looking at like the Robinhood 24-hour market, right? That's basically them adding liquidity for institutions, right? Because they're not real market prices. You're not necessarily getting, the best offer. Something like I don't like 24-hour trading overall, right? Because really all you're furthering the advantage of algorithms, because just by definition, it's going to be more algorithms in there because they can trade all night and less kind of people trading. So overall, I don't like the trend. But if Robinhood is going to offer 24-hour trading, and I do think more and more people will use it, I do like that the New York Stock Exchange is joining the mix, because that will add more diversity to the buyers and sellers and give less of an advantage to the institutions. But the trend overall, I hate, because you're really giving a bigger, the more thin the trading is, the more advantage an algorithm has, and also the more opportunity you're giving a place like Robinhood to make money on payment for order flow. The less flow, the more they can kind of price gouge. So I don't like the trend for the market. I do like, people talk about, they do this all the time. They talk about democratization, but it's not democratization, because all it's doing is giving more advantages to the institutions.
Do you think it'll impact like the psychology of anyone, like having to worry about your portfolio all day long versus like knowing the market's closed and then kind of just relaxing for the rest of the day? Like, do you think that's going to impact people, maybe secondary side effects a little bit negatively if they're having to always like put that brain power towards it?
Yeah, I mean, it's definitely like I think what the worst part about it is like sometimes your brain needs some distance to think on things well, right? If it's there, like if you're looking at market data all the way up till you're going to bed, or like and also when I mean, it was already when you wake up pre and post market, right? But like also if you think about it, like if you're tired at the end of the day, it's like midnight and you're still up, like that's not really good mental conditions for you to be making trades. So yeah, it just adds more points of potential error.
And lastly on this, they mentioned that it's going to be tokenized assets and on a blockchain, but they didn't say if it's their own like in-house, technology, or if they're going to be using, an Ethereum, Solana, or any of those blockchains. If they announced that one of these
The
cryptos,
NYSE said they were going to be tokenized assets.
yeah,
Well, yeah, that's a liquidity problem again. That's just giving that's you're basically adding like liquidity and more price control for institutions. Like actually more potential to do like overnight naked shorts, things like that. That's terrible.
what would be the impact on the crypto? Like if it was a Solana, Ethereum, Cardano, do you think they would instantly be repriced like way higher if that was
Yeah,
announced?
yeah, definitely.
Hmm. Yeah, so I'm going to be interested in watching that to see if any of those were chosen as the blockchain for it. Um, all right, next story. OpenAI. We've covered how they are looking to go public this year. Um, they are announcing that they are adding ads into their free tier of ChatGPT. We kind of theorized about this in the past. It's been rumored. Hasn't really, maybe a trial balloon, you could say, of them adding it, but it looks like they are going to do it now. How do you think this will impact their users, the adoption, and the overall satisfaction of ChatGPT? Because we've talked about some of the downsides of maybe having ads in something like that before.
I mean, it's it's like I think it's a short term net negative and a risky one, but a long term net positive, and I'll explain, right? In the short term, Gemini, Claude is getting some, like, I think more and more people are using Claude to code, whereas like ChatGPT was doing more just because it had people there. And they're kind of losing that. So just like the usability, I think you might see, everybody's talking about how good Gemini is. You might see people jump if Gemini doesn't have ads and OpenAI does. That's thing one. But if they can show more revenue and it gets them, more, IPO, more funds, then, you might say it gets them more money. They can build features faster. But it really depends. It all really depends on, something we don't know, which is how loyal are people to ChatGPT, right? If it's just something that they use already and nothing's changed about it, maybe they'll stay. But if the ads get there and we find out that it's like, especially with Gemini coming on, it's not as sticky as people thought, that's really dangerous because that could devalue them if they're losing users. Like, let's say their revenue goes up 10%, but their users go down 20%, right? That's a bad trend. They might end up reducing their IPO more than increasing it. And you could say, well, for small bits of revenue, why are they taking that risk? So yeah.
Hey, we got a name change. Now it's Reese's in the chat. I like Copilot and Gemini for different reasons. Do you think it's possible that OpenAI could be like the Yahoo of this, and they were the first movers, but they're not going to be the winners? Like, I don't know. I feel like it's looking more like that now than it ever has before.
Um, I mean, I wouldn't count them out, but they all are also like losing people. But this is what's hard, right? Mira, I believe Marathi is her last name. She left with like two people to form thinking machines, and I think two of them are back at OpenAI. So I wouldn't count them out, but I also wouldn't have said even entertain the idea that they were going to be the Yahoo a year ago. Like the landscape has changed a bit, but like they still have a lot of capital, a lot of relationships, a lot of users, and it's hard to get people to switch and start using your platform. Um, like, for example, I think a lot of people were annoyed by Google Ads and how much they had proliferated. But everyone still used Google, even though they were annoyed until these LLMs came along, right? So I do think you need both. And that's where, like, if OpenAI, again, a year and a half ago, they rolled out ads, then that's what they should have done. Because then people would have gotten used to the ads by the time a threat came. But now that there's a legit threat and they're talking about rolling out ads, I wouldn't do it if I were them. It's pretty dangerous. But they do also have a lot of slack. So, maybe they can pull it off.
JC is saying the standings are going to change quickly and frequently. Google was booed for their AI efforts until recently. Yeah, Google's made a big comeback in the AI standings of it all. My experience is like you said, how it's sticky. Like I still use ChatGPT because I have all these threads and like history of it, and I'm not looking to switch. But what I have noticed is like there were one-off questions that I used to go into ChatGPT for that like I found the LLM would give good answers, and now I just go right into Google search because they have like the AI feature that shows up on top. So I've kind of reverted back in that sense to Google a little bit more. I don't know how you feel if your using of the LLMs has changed at all recently, or any differences over the past like year with yourself.
Yeah, I mean, I still use my instinct, unless I have a more complicated question, is still to use Google, and it has been like there were more than a few times where I put something in Google and like I just got like a shitty answer. I was like, I should have just asked Perplexity, and then I'll go to Perplexity. But I would say I found that less and less now that they have Gemini in the search results, and it's just easy because if it's just something like an address I'm looking for, Google is still the best thing. So I've gone back to Google a bit because Gemini does help. But yeah, like the only thing I still use ChatGPT for is like editing, or if there's like a quick answer I need on kind of like like a research question that I put into deep research in Perplexity that I don't really have the time for. Those are the two situations.
Looks like people are agreeing with us too in the chat. And JC is here, so we can get to a question from the Discord. It was about ARM. So what does George think of ARM as a potential bounce back opportunity? That was the question for you. And I like that we were getting asked about this because I feel like we don't really cover this one as much as some of the other semi companies. So what are your thoughts on ARM at the moment?
Let me take a look at the chart. Yeah, I mean, that kind of looks like a double bottom. Let's see how it looks in the signals. Not too good in the signals, but the chart looks right. But no, it's just not rebounded. But yeah, the signals look good.
Mm-hmm. How do you feel about Intel? There was a question about them as well, and I think they are reporting this week, if I'm not mistaken.
Intel is a bit tough because I mean it looks good in the signals, but they've just run so much already that it's hard for me to get behind.
We have a longer question now. It was from NW in the Discord. He read an interview with you from Dunn Street from October where you said how you would invest using 10K. He was asking if we lowered the total to 1K and it was for something like a child for 18 years. how would you manage that kind of investing if it had a really long time frame?
I don't understand. Sorry, I don't understand that question.
So he was just asking, I think, for a lower total, so a 1K investment capital that you have to invest, and thinking like you have an 18-year time frame on the investment. Would you change anything, or just how would you think about it if that was the time frame?
1K, 18-year timeline.
Mm-hmm.
I put it in the cloud providers. That's what I always say. I just divide it up amongst the cloud providers.
So Microsoft, Google, Amazon, for those
Yeah.
that haven't heard. Yeah.
On an 18-year timeline, like, yeah, I think that those are the businesses. And it's just like, we know cloud is going to keep growing, right? And, maybe one or two of those will outgrow the other ones. But if, Microsoft, say, doesn't grow its cloud business or starts to shrink because the other two are so much better, right? That will mean the other ones are, eating more of the market, I think, and grow anyway. So yeah, on a long time frame, those companies and those aren't going to be the most upside, but even if you look at something like, ASTS, I mean, I guess it could be acquired and cycle through, or whatever. But yeah, I just think like if you want to set it and forget it, those are the three best for that long.
Yeah, and it's interesting because you really haven't changed your tune on that. That's what you've been saying for like years now on the stream. So, that's kind of been the go-to.
And
The
I'm
best
sure all
bets in the
three of those
market.
companies have done well for the last 3 years.
Definitely. Yeah. One thing we didn't in the OpenAI story, their
And yeah,
impact on
actually,
Microsoft.
to just situate that a little better, right? All of those companies have done well the last 3 years. But if you look at some of our favorites, it's changed. Like we used to like 3 years ago, we liked SMCI a lot. Um, you know, Last year, AppLovin, right? Like on a shorter time frame, you do want to, um, kind of pick the highest upside stock because you can see that in front of you. But the highest upside stock can kind of like get to a peak and then still not be growing as fast, right? Whereas I like those cloud providers because I expect like 15% year over year growth, like clockwork, right?
Mm-hmm.
Whereas, the other ones might cap off, like, might cap off a little bit, but also at their size might need 30-40% growth to get the same attractiveness as like Google and Amazon that are already so big at that like 15%.
Mm-hmm. Well, like trying to predict 18 years from now, it's almost impossible. So there's a lack of visibility that you kind of need that, like with those cloud providers, that like long-term, like clear view of their business and like what you're saying of the confidence you have in it to grow year over year. Because
Yeah,
who
it's
knows what's
like,
going to be 18 years from now?
yeah, like, am I totally confident that Google search is as defensible it's been? No, I don't know that. Am I confident that, Amazon can keep growing its retail business, or there might be other, like, if there are truly, like, if they're marking up over anything, could some take market share there on a longer term basis? If there is a different delivery mechanism or, product change or whatever, could that affect things? Like, yeah, I'm not as worried about them versus anything else. And I think they'll acquire other businesses. But like, there's no doubt in my mind those cloud businesses are going to grow. Like, I would consider that to be as close to a no risk investment as you can get in terms of other people taking that over. And it's not just about those businesses growing, right? It's also about like, if you're Nvidia, right, and there's an up and coming cloud provider, you'll sell to them, right? But who are you going to make sure you're going to keep happy? And it's like, we know more capacity needs to happen, right? Who are you going to keep happy? those guys, right? They're going to add capacity, right? The people ordering tens of thousands, hundreds of thousands of chips. Like if you have excess, sure, you'll go to an up and coming cloud provider that might, be ordering like 1,000, right? But it's not the same, right? And then it's also like power transformers have become a big constraint, right? And it's the same thing. Like, who are you doing business with as someone that sells power? Someone that's going to make a bigger order, right? So those cloud providers have an advantage on every front in the most important thing, which is acquiring supply, right? The pricing works itself out and the power costs have gone up, right? You need that supply.
Mm-hmm. And I don't want to lose this question because the chat is popping off today, which is cool to see. But someone was asking before about LEU, which actually was the short that we posted on the YouTube channel, which we discussed last week. But when we discussed it last week, it was before the ASTS contract announcement, I believe, which we'll get into more detail in just a bit. But is LEU still the number one?
Yeah, in the short term, right? And we talked about this in the letter. Like, we still like ASTS the most as a company, right? But it just eclipsed its all-time high, right? So we think there's more room to move down than LEU, which is still not really all that close to its all-time high. I think it's still 20-25% off of it. And that's just like, simple. It's like simple math in terms of, how we're managing risk this year, which is more aggressively. So if we're going to, kind of force ourselves to pick between those two higher risk stocks, then we made the tough call about LEU because it just hadn't run as much, not as near as all-time high. And we did the same thing in the letter this week, right? We had high conviction that AI hardware companies were going to do well last week after, the TSMC earnings. So we had MBIS and CoreWeave in the portfolio, but we cut it down to one because we were feeling worried and option sentiment was low. Like, we are really mitigating risk a lot more after the way that the year ended last year and kind of the difficulties with that.
The chat was also bringing up SoFi and a lot of conversation about it. Any thoughts from you on them? They are currently red year to date, and they had a big rally last year, but have kind of been trending sideways for about 5 or 6 months now. So any thoughts on SoFi?
Everybody's always so obsessed with SoFi. I don't know why. I guess like brokers, people like, it's got like kind of the Robinhood thing, but I just don't like, if you get into brass tacks, right? And you're just like, what is so good about Robinhood? It's interface. It's easy to use. Like, people want easy stuff. I've used them both. I don't find SoFi as easy to use. And I also don't like their exposure to college loans, right? They're talking about like canceling principal on it again. And it's happening all the time. Like, you got to figure that might happen sooner or later. Because now, like, Trump is talking about it. Biden talked about it before. They it almost went through. So yeah, like I just like, retail gets like attached to these stocks that they're closer to. I look to not the best net option sentiment, but like, if I can teach one thing, it's like fully realize a thesis, right? And if you're just like, oh, SoFi could be the next Robinhood, I think that's a bit of a lazy thesis, because you haven't even done the breakdown that I've done, which is just like, yeah, what makes Robinhood interesting and attractive is the way their interface is just better and a lot easier than a lot of stuff. And SoFi isn't that, right? SoFi isn't that. And then it has, college loan interest rate risk that Robinhood just simply does not have. So yeah, like, I don't like, I do understand that when retail is like closer to a product, there's a natural desire to be like, oh, I know people that use SoFi, or I use SoFi, or whatever, and kind of latch on to it. But it just is like the thesis as like, the next Robin Hood, or maybe it could move like Robin Hood. It's a weak thesis. It doesn't check out. It's lazy.
Mm-hmm. So there you go, everybody. There's George's thoughts on SoFi. Question from Mario as well. What do you think about the notion of some analysts who tout stocks that you should buy and hold for 10 years or more?
I mean, it really depends on the analyst, right? Really does. Because I think if you can, then this is one of the things we got to get our smart price targets out sometime this year. We validate the efficacy of that analyst. But I would say, like, read the report, even just do the kind of thing that I just did. Does the logic around the investment make sense, right? And analysts have to show their work. So generally, I don't know. It could go one way or the other in terms of if you should trust it. But how you make the determination should very much be, and this is what we always say, about you validating the thesis, right? If it makes sense to you, then, run with it. If you're just like, it doesn't quite add up, then no.
Well, this made me curious as you were speaking as to, because you were saying validating the efficacy of the analyst. Like, is there any names that pop into your mind? You mentioned Dan Ives in the beginning of the stream. Any Wall Street people that you see them make a statement or make a prediction, and you're like, oh, okay, that person's saying it. I have more faith in it. I've seen their
I don't
track
really
record.
know analysts that well, but at this point, you could probably just Google name of analysts, and just the simple things like, can you show me this analyst like price targets on mega cap stocks, right? And go and look, right? Look if they, like, I say mega cap because you're most likely to know them. Do you agree with the other price targets, right? I mean, I don't know if you can ask Perplexity to assess the quality in some way, like how often does this analyst price targets end up winning, or like something like that. I could look at like a Perplexity query. But yeah, that's how I look at it.
So there's one stock that is just moving gangbusters and has no quit in it, and that stock is SNDK. It's now up 70% year to date and up over 8% today. And we've been following it a bit, but I mean, this is a newer IPO, only a year old now, and up 800% since IPOing. What are your thoughts on SNDK? We talked about the the infrastructure before a little bit when you were talking about the semis. They're kind of in that space, but I mean, this cannot be the right time to invest in it if you don't have a position, right? After running this much this quickly.
Wouldn't be my preference, but I do think it's still, like, especially in a smaller portfolio, I do think it's appropriate to pick one stock, right? And one of the reasons that CoreWeave was our only one was the same reason. Like, it's very far off its high, right? Probably CoreWeave and NBIS are the ones we have our eye on the most. But like, if you feel differently about another one, I think it's very appropriate, like us, like if you have like 10 longs or less, for one of them to be, something in AI hardware.
I mean, it's just fascinating watching this stock move. I don't know if it's a short squeeze or what is going on there. And it's now a large company with a $65 billion market cap. So fascinating to see and track, and that whole infrastructure of AI space come back strong, as it was a little bit weak towards the end of last year, but starting off good in 2026. JC commented, look for an analyst track record to get a sense of where they stand. For example, Dan Ives is bullish on tech stocks. Then George and Dan would get along, I think, if they were to ever chat in the stream. Let's see. All right, moving on. We have a topic about the Magnificent Seven companies, because unlike SNDK, which is rallying ferociously, A lot of these companies are off to slow starts this year. This morning, Google was the only Mag 7 company in the green year to date, and it was up just 1%. Some of the leaders on the downside were Meta, Tesla, and Apple. A lot of these names are down between like 3 to 8% to start the year. Can you point to anything as to why they would be red to start? Is it some of the interest of investors going to the SNDKs and the other companies, and these Mag 7 stocks have rallied, so just not as interesting? Or what do you think? Why are they red so far in 2026?
I think they just all, I think they all ran so much. And I think I haven't seen a lot of these stocks, like Nvidia included, behaving the same way since Michael Burry's warning. I really think, like, if I got to point to one thing, obviously that affects, Meta, that affects a lot of the stocks. I mean, I think Tesla is a different story. It's not really affected by that, but I think for Tesla, it ran so much, and like people are still, bullish, but I just don't think. I think their sales are a concern, and like I think for a lot of institutions at that valuation, self-driving robots hasn't manifested enough. But yeah, I think that for like Meta, the cloud providers, there's a lot of worry about, I think, that CapEx markdown. I think that's a definite concern. But yeah.
Is there any aspect of it like these companies are so large, they have to kind of transfer to being more value companies than growth companies at some point, and people have flocked to them because they've had the most exciting growth for so long. But now, like we were saying, the SNDKs, the NBISs, the ASTSs, all these other companies that have such exciting growth futures, could it just be some of that capital for the investors who are looking for high growth switching and viewing these Mag 7 as more value?
No, because like people were not buying Meta or Google or whatever as a growth stock, right? They were buying them at kind of like GARP, growth at a reasonable price. So no, like they're just not growth stocks, All right, should we get to some of these questions?
Yeah, we're piling up here. Maybe I think we could start with Nick. When you consider your portfolio, do you take into account all of your different accounts like brokerage, Roth, IRA, or do you consider each a separate portfolio and manage accordingly?
That I don't trade on my personal account, so I don't really do that. And I would look at it but if it was me, I would look at them as a complete picture. But like I would look at because of the way taxes are handled in like an IRA, I would actually look at, I would do my riskier things, like shorter term holds in an IRA. But there's sometimes rules around that, more rules. But I would do my longer term holds in a personal account, right? Because there's more immediate taxes in that situation. So that's how I would do it.
Okay, a question about what's stopping somebody from just buying one really high conviction stock and holding them for an entire year? Is it always bad to have minimal risk management or worth it for certain people?
Yeah, too high risk, right? Single stock risk. I'll actually start explaining it a different way than the other. I don't tend to like in my high conviction portfolio stocks with high market similarity, right? Once you start to get above 90 market similarity, anything like that, right? You're essentially buying the market while still taking single stock risk, right? So a high market similarity stock, you're basically saying like, oh, in the best case scenario, this is moving like the market. But if there's so you're getting added risk for a similar return as the S&P 500, right? So, take that to extremes and you think about just like single stock risk. The problem with it is you're always a headline away from losing headline, bad earnings, away from, bad guidance, maybe tariff news, anything like that, from losing, 20 or 30%. So let's look at like just at earnings for a second, right? Like there is some probability that your single stock just has a bad earnings, right? But given the fact that I think like 80% of the companies beat last quarter, like if you have, 4 companies, it's likely that 3 of them beat, right? But if you look at the other side to that, if there's like, about a 20% chance that one stock doesn't beat, I think it's a little higher. I think tech was like a 74% beat, for example. So there's, a 26%, chance there. That, you've picked the one bad tech stock, like, right? That's a lot. Like if you look at it, like you're basically rolling the dice at, a 0.25% that you're facing a big loss, right? Whereas if you hold 4 stocks, you're actually like the dominant probability there is that you win in that portfolio. So I think that's an easy way to understand, even if you're diversifying to 4 stocks, how that really changes the game.
I feel like some people don't take into account the emotions of it all too. Like you can be right and be wrong at the same time. And what I mean by that is like, say you high conviction on a stock for a year and they have a bad earnings when you're 3 months in, drop 20% and they're your whole portfolio and you see that, maybe you get panicked and sell. And then for the next 9 months, the stock goes up, but like your emotions kind of took over in that situation. So you can, when you're so, have no diversity in your portfolio, you can kind of get like those big emotional swings and you can be right and wrong at the same time. Risa said news can also change on a dime, and what was a stock darling can quickly become a pariah in the portfolio.
Yeah, definitely.
George, no, you have to go. Any last thoughts on ASTS? That was our final Discord thing now that they got the contract.
I mean, it could keep running. Like one of my things that I said about it is like they're launching all these satellites. There could be a number of good news events, but I just think like I still have to bet on a pull. We've seen a lot of pullbacks with it when it gets to all-time highs. And I'm still looking for a pullback and then like something like a bottom before I get back in.
Mm-hmm. Well, thank you, George. Thank you, chat. We got a great live stream today in the comments from JC. We will see you all Thursday, 3 p.m. for another great live stream and hopefully a green market. But until then, thank you, everyone. See you all soon.
Thank you.